what's the harm in asking a question?
Yeah.
What somebody might say, I'm too busy, I can't answer you. Well, you know what? Then you have another professional or another professional.
Exactly. It's passionate.
Exactly. But it's actually identifying that you want to do something that I think can, essentially you want to grow generational wealth. You want to be in a position where you're leaving something behind for your kids and stuff. And I think that's what that's one of the most important factors in terms of having like a form of stability.
Incentivize people to like be like, yo, we know now. Actually, we're coming this part. Yes, do that. I'm not telling anybody anything no more.
Yeah.
I lied. I didn't do anything.
Yeah.
No, but
it's one of those.
Dude, after that podcast, like I started to like do my research even more.
Mm-hmm.
There's like a bunch of videos on YouTube. You can learn anything on YouTube, right?
Yeah, no,
so
for real.
I just started doing so much research and came across like interesting aspects in crypto.
No
right?
way. What'd you find?
I don't know how much you like. Did you do like
I didn't
more
do much research after the episode. I did some prior, but like that was it.
Yeah, man. Because you know my journey, right? Lately, I've been trying to just find like investments to look into and to kind of dive myself into. So it's been interesting because it's actually opened a venue to other things, right? Other like real estate. Like I was talking to my friend, ETFs, NFTs.
Yeah,
Bitcoin, obviously, right? And all the other coins, but
it's been such a crazy right now, eh?
Do you even know I don't know. I barely know what that is. And
I don't really NFTs. I don't think I have a good understanding because I can't understand how people can pay so much money for digital art.
Yeah.
Imagine, like I can't even imagine, spending $50,000 on images.
Yeah.
Which, well, essentially they say it's an investment because the value of those images will essentially increase.
Yeah.
But like I can't find the sense in that. I can't see how that makes any sense.
I just think that right now, like a space is opening up in technology and people are just trying to like do different things.
Yeah.
So maybe in a couple of years, in a year or two, when it settles, you can find exactly what direction is going to go. Because that's why everything is up in the air with all these NFTs and stuff. But for today, we have a really good guest talking about like investments and stuff. We did a little bit of crypto, right, with Bitcoin and stuff. But I think today I want to focus on real estate. As you know, like I was actually a couple of weeks ago trying to like see if I can myself get a property.
You did.
So I want to have somebody on that is kind of like expert level. So today with us, my good friend Brian. Welcome, Brian, to the show.
Hey Brian, welcome, bro.
Thanks for having me, guys.
Yo, thank you, man, for coming on. Like you're the real estate guru, I think.
Yeah.
Not yet.
Tell us a little bit about yourself.
Yeah, absolutely. So I actually just I'm an independent mortgage agent right now. I worked at a bank for about 9 years.
Okay, right
and, on. Nearing the end of my tenure there, it was I ended up as a mortgage specialist there. So like I found my niche, so to speak. Right, like I had a very good career. And,
nice. What roles did you play at the bank in those 9 years?
It was primarily customer facing, right? It was I went from teller to financial advisor, then branch manager for a few years. Yeah,
nice. That's awesome.
And then after that, I actually ended up as a mortgage specialist because I just throughout my career, my journey, I always loved the lending component of what I do.
Right.
And so I just kind of followed my passion, and then now, thankfully enough, I'm incorporated independently, and it's just it allows me to have more avenues basically for like my client base and to be able to offer them a little bit more.
Right. Of course.
Thorough analysis, let's say.
Right. That's definitely.
So what is like your day to day? Like what does your day consist of basically?
Day to day. So it's funny because when people ask me that question, it really boils down to it's not only real estate that you have to do, right? Like a large part of what we do as professionals in any financial segment, I think is all about doing research and being knowledgeable and understanding that there's a lot of variables that come into play when you're dealing with one particular segment, which like you guys are talking about, Bitcoin, ETFs, mutual funds, indices. And real estate is factored in there as well, right? So
100%.
My day consists a lot of application structure. Yes, like I always say there's no two stories are the same, and that's what I think I love about my job. Because Oscar and I were talking a little bit earlier today, and I was telling him my favorite part of my day now is that I remember why I got into the lending aspect of things.
Your passion.
Yeah,
you found your passion. Yeah.
So I got into lending because it's a very good feeling when you see like a first time home buyer that is purchasing a home, and they're so
Definitely.
excited, and like this is the biggest purchase of their life,
Right.
essentially. And with that being said, like I follow my passion in the sense that like I like complex applications. It's just something that I like to problem solve, right?
Okay.
Yeah. So I've seen it all from a new family buying their first condominium or townhome, whatever the case may be, to a sophisticated real estate investor that has purchased more than one property, and like we're gearing towards the fourth, the fifth, the sixth. You know what I mean?
Yeah.
So
Nice.
or if we're going into the commercial landscape and stuff, maybe a multiplex, something like that. So
yeah. Okay.
it's my day consists of market research, talking to realtors, discussing talking to some of my centers of influence that like we do business together, and even trying to go out there and just meeting new people, new stories. And I always say like everybody has a story, right? So when I'm deal structuring, let's call it like when I'm writing up an application for a client, because it's a negotiation at the end of the day. You have to identify a client, you have to take into account all their personal situations and all those things, and then you have to talk to a lender, and you have to say, okay, this is why family A, B, and C deserve to have a home, or deserve to scale their portfolio, so to speak.
Right. Exactly. You're like their like voice. Like you speak for them in an aspect.
Like I guess like probably like the main question that I know like, maybe our listeners would ask, or like a younger generation, what are the main hardships in getting your first purchase? Obviously we know in Toronto like the market price is going up every year and stuff, so what would you say is the hardest part?
I think that is honestly, I think that is the main question when it comes down to real estate. It's how do I get into the market?
Right.
What's
the right time?
And for me, I just genuinely, like, when I first started in the bank, I was learning a lot about personal finance, and then I geared towards lending, and then I specifically geared towards real estate lending. And even as a professional, at the beginning it can get a little bit overwhelming. There's a lot of questions, there's a lot of questions and not enough answers, or you feel like that, but there are answers. You just have to look for the avenues. You need to look for, it's like we were discussing, like you need to look for the professional, or look for somebody that's very passionate about this license, that you can actually give you sound advice. And so back to case in point, when I think about my journey, I just and I remember my first application. Actually, I remember my first application. I wasn't the best at what I was doing, but practice makes perfect, right? So
100%.
And I think that you learn by being involved in it, right?
Right.
So,
it's submersing yourself in it.
Yeah.
You learn the best. I learned the best that way. For sure.
But it's professionally and personally, like you have to, everybody. I think if you were to ask the question, do you rent or do you own, so to speak, a lot of people might be on the initial side of that spectrum, because
for sure,
like we were talking housing prices and stuff, they're at an all-time high right now, which is good. It's good. There is no good and bad. I just believe that it's something that will consistently grow as we grow as not only an economy, but just even as a species. We're getting faster, more efficient. We're becoming more technologically savvy.
Exactly.
How do you get into the market? You have to actually take an attempt. You have to take a leap of faith, and and truthfully, whether that's speaking to an institution or speaking to an independent broker or whatever the case may be, the first thing you have to start doing is actually like living it and wanting it. And asking the question, like, Oscar reached out to me, and he knows I'm in this industry, and he's looking to do his own personal venture, which is phenomenal.
Yeah.
And so we're discussing, some stuff, and then we got to talking, and then, he invited me over here because I think the most crucial part of any market, of any topic, is really having answers to those questions again. So
100%.
if we can shine some light tonight and give some people some confidence to either book an appointment with an institution, or maybe you already have some realtor friends, ask them some questions. They might know some people like myself that specifically aim to finance real estate, right?
Oh, definitely.
Yeah, like the main question that my friend asked me when I met up with him a couple of weeks ago, and he didn't ask me, he told me, he goes like, I just want to get you in the market. Like, don't worry about like where it is or whatever, because your goal is to, like, it's like an investment, right? Just to get in the market. And with that being said, like us talking earlier, you kind of mentioned something that was interesting. You said even if you get a property like down in like Thunder Bay, or it doesn't matter, because I think that's a taboo, right? Like you think it has to be in a popular area.
Yeah, exactly,
right.
Exactly.
So tell me some about that.
Yeah. So my whole thought process here is, and I'm still in preliminary stages. I'm consistently working to see if I can like better improve what my network can provide, and what I mean by that is, it's exactly that. The worst feeling is in a fixed income economy, or no, not a fixed income economy, in a fixed income position. Let's say you're a salaried employee, and you're making some decent coin, and you're making like 120,000, let's call it a year, right? And you don't feel like you're making 120,000, and the reason for that is because we don't necessarily have the best taxation system in this country.
No,
you know what I mean?
Yeah,
So, and I think, and that's by no means in any derogatory status. It's just factual that we have a very high marginal tax bracket here.
Yeah, so I just want to touch on that because like a lot of the NBA athletes, they actually don't want to come to Canada because of how high the taxes are. How much of their that's actually a conversation. Yeah, because at the end of the day, they're being paid a lot of money, but like they don't like to stay or play in Canada because they get taxed.
Yeah.
You know what I mean? It's the same. It's the same thing.
So it's so the emerging question is, can I even afford to buy?
Right.
And like Oscar mentioned, that is the taboo, and you don't necessarily. So listen, we could change one factor in the equation if you really think about it, right? So if you make a decent income, right, and you manage to save. It doesn't have to be a substantial amount. So like you have to look at your areas where like if the average ticket price for a real estate property is substantially higher in Toronto than it would be in something like Thunder Bay or Timmins or something in that area, right? Like I've been hearing a lot of my client base, a lot of my like my network as well has been asking me questions about, if we were to buy something in a rural location, so to speak, right?
Yeah.
We continue our rent here, but can we tenant it out over there? Can we get like what's the cap rate? Can we get a decent amount? Can we break even, or can we actually net positive, right? Because I was actually speaking to some property managers in those areas, and they're telling me that they can actually, and this goes, and I have clients from Newfoundland and Nova Scotia, and now apparently like we're gonna do some projects in Thunder Bay, but
nice.
A friend of mine told me, he's like, I property manage some houses and stuff that are like multiplexes, or let's call it a sixplex, and you can buy it for 500,000. We're just throwing out numbers here, right?
Okay, yeah.
You know what I mean? Like, they're just to put an example, but and we, like, my whole job is to basically equate whether it's going to be a profitable project. And the thing is, a mortgage for 500,000, the monthly payment's like 2,000. Let's say you rent like a fourplex or a fiveplex, or you buy a fourplex, fiveplex, and you're renting out I don't know, 5 bedroom, like a 5 one bedrooms at $1,200 a month. You know what I mean? You're if your mortgage payment is 2,000, you have to factor in some costs too.
Right,
it's not
100%.
just gravy, but you have to factor in property taxes.
Yeah.
You have to factor in your utility bills, the property management firm, and all that stuff. But if you're still grossing, like, let's call it 5,500, and your expenses are about 3,500 or 3,000, let's call it.
Yeah.
You know, if you're making a profit, what in turn that you can do is you can actually alleviate some of the costs because of that profit in Thunder Bay or something. You can actually alleviate some of your expenses here, because if you're making a profit of 2,500, well, guess what? How much is rent in a 1+1 bedroom in Toronto? 2,200, 2,300.
Yeah, easy.
So like, you're breaking even, but not only do you own something somewhere, and not only are you a landlord, you know, there are some tax implications. Obviously, ask your accountants and stuff, but you know, you're building equity in a property.
Right.
Your standard of living is, you still may rent in Toronto. You might still be renting in Toronto, but guess what? You're an owner somewhere.
Yeah, exactly.
And as time progresses, as you know, because truthfully speaking, I think that we're an ever growing population, right? That's a standard.
100%.
So, you know, ironically enough, I'm very obsessed with Elon Musk lately. Because,
same.
The guy he's a visionary, and I watched his last interview. Don't quote me, but I think it was on the Wall Street Journal, but on YouTube. And you know, he says our problem isn't a population problem. Our problem is like an efficiency and a production problem. Like, we're not building quick enough.
Right.
And for someone of that stature to make that type of statement, for me personally, I believe that was a very impactful statement, because we're so concerned about population control and stuff, and what if all our resources were going to actually like scaling? Like he's talking multi-platform highways and stuff, and some cities in the United States already have that.
That's true.
But so we're gonna keep growing as a population. So where are people? Look, and there are people that already live in these areas,
right?
That are rent. They have the same problem over here because it's all relative, right?
Yeah, exactly.
So if you're making 120,000 in Toronto, then you're making a good living. But if you're making 120,000 and you're utilizing some of that income to, grow your investments, because that's the main objective in a different vicinity. It doesn't have to be a hot pocket. Just talk to a professional, talk to a realtor. You see individuals posting on Instagram and social media platforms like crazy now, right? So ask a question. That's the first thing, and that's why I've started to open up my avenues to just publicly saying, like, if you have a question, I don't even have to be your representative. I don't have to be the agent that helps you, but as long as I'm helping someone obtain that house, I think that's why I went independent, because the more options you can provide a consumer, like the more informed they'll be, and I think I might be able to reach a higher, like a larger demographic if I have
definitely.
more.
And that kind of brings forth like a really good topic, which is like kind of we were talking about, like generational wealth, right? So generational wealth has to start from something, and I think the lack of questions is the problem, right? Sometimes it's like school even, right? Sometimes you come here, you don't know their scholarships. You didn't know there were other
bursaries.
Exactly, like dude. Like I never knew. Like nobody ever told me. And you can't say that. Oh, you didn't do research, because I didn't even know what to research. But like first year university, I realized I could have like applied to all these scholarships that I probably would have gotten it.
And grants,
So I'm like, and then it wasn't until like somebody told me the first year that I did it, and I got some grants for my second year and stuff like that. So on that, there are questions that need to be asked. Right. And I think that's very important, right? Because someone like me, and I think you kind of mentioned it too, like kind of like first generation, right? Like our parents came like probably with nothing or little, and they tried, but they had kids or whatever. So now it's up to us to find other like investments to go into
some avenues.
And you know what? And it correlates. I really do believe that regardless. Listen, there's always going to be a different investment strategy. Like I said, no two stories are the same. So, and I mean that for each individual, right?
Yeah.
And so, if what you're looking to grow is like on an investment spectrum, we were just talking about NFTs a little earlier today, right?
Yeah.
And like some people look at that as an investment, and as long as it's generating some form of like growth,
some sort of passive growth.
You know what I mean? Like, like as long as you're actually taking your time and researching what you're doing, you can't go wrong. And as long as you're leveraging professionals, then what's the harm in that? What's the harm in asking a question? Somebody might say, I'm too busy, I can't answer you. Well, you know what? Then you have another professional or another professional.
It's passionate.
Exactly. But it's actually identifying that you want to do something that I think can. Essentially, you want to grow generational wealth. You want to be in a position where you're leaving something behind for your kids and stuff. And I think that's that's one of the most important factors in terms of having like a form of stability, right? And it's not and by no means am I saying you need to be the wealthiest person in a city or anything like that. But what I'm saying is, you always want to be prepared. And I honestly, over the last little bit in my journey, I've been thinking about this more and more, and I wonder if and you said it best, if we had asked more questions about specific topics that we were interested in, like where would we be? And I think, but honestly, I do believe that we're making a trend for more information as we progress.
With time. 100%. Social media and stuff like that. For
sure. Interviews, YouTube, like everything, Twitter and stuff is it's like a media platform in itself.
100%.
You want to find something out about the world that's going on, go on Twitter.
Literally. You want to get your the movie spoiled of Spider-Man, go on Twitter. Literally, everything is there.
So, you know what? I think that in discussing general wealth from what I do, in real estate, I think that the best way to start is to actually get up and start and just type it in Google. How do I buy a house?
Take that calculated risk. Talk to a professional and get yourself assessed. A lot of people are afraid of like how they look on paper. Right. But like as soon as you get past that fear and you talk to somebody that knows, like he'll let you understand that you're not alone. There's so many other people in your situation.
Oh my gosh.
Right. And like that professional might be the best sort of like person to get you out of your situation. You know what I mean? So I would, like you're saying, I agree.
I think the number one thing is saving.
Learning how to save,
like
man.
straight up, especially as kids, right? Like you wanted that like $1,000 like massage jacket, or you wanted that like those Beats Dr. Dre.
Oh yeah, you want the Air Force One,
the luxury spending.
Legit.
And there's a balance, right? When you're a kid, you should have some luxury because you're a kid, enjoy your youth, but you should also
be prepared.
Exactly.
A lot of us aren't prepared, to take that leap of faith into adulthood. Like I just recently turned 31, and I'm looking back. I'm like, when did this happen? But it's just genuinely like it's a question. But I'm loving my 30s, man. I'm enjoying it. It's like, you know what? You take the skills, the mistakes that you might have made in your 20s, and you put it into yourself, and you just learn from that, and you continue to grow. So as I progress more in my career, I'm seeing more and more how many complexities we really do have in a specific area of Canada. Canada's a very large country.
That's true.
Very large country. And what have we taken from this whole situation that's been going on, people explored Canada, and I like that. People got out there. People were talking to me about, obviously the main cities are always going to be main cities,
100%.
You have Banff, you have BC, you have all these main cities and stuff, but it's been really nice to hear people that have like actually trekked it down through the roads, and they've actually seen Canada, and they know like different areas. So what's to stop you from investing in yourself, and what's to stop you from investing in an area? Let's say hypothetically you can get a detached home for 150,000 or 200,000. Don't quote me on that, but let's say hypothetically in like an area where it's not a sought out area, but you're buying like think about Houston, like it's not only in Canada. Think about Houston, Texas. Like I was looking at a little bit of real estate there. I actually have a guy that a gentleman that I met at a Raptors game, and he was talking to me, and he said, he's like, my next purchase is going to be in Houston, Texas. I told him, I'm like, my folks have been obsessed with Houston for years. And I never really, thought about it. But, if I can buy something for low, renovate it, make it nice, sit on it for a few years, tenant it, why not?
Yeah.
Because the cash flow is going to be there. The worst case scenario, you break even. And in worst case scenario, you throw a couple $100 into something you own. You're going to rent regardless.
Exactly.
If you're a renter. And if you're already an owner, well, guess what? You should tap into some of that equity and refinance it. Take some of the money that you've made and put it into more investments. And that's how you start to scale generational wealth from a real estate side.
I want you to touch on that story you were telling us earlier. The guys in New York about their business plan. It sounds crazy.
Okay. So I just recently went to New York. Actually, I went on Halloween weekend, and it was it was a good vibe there. It was
nice.
A lot of people take Halloween serious in New York. Let's just say that. Times Square, costumes everywhere and stuff. Very fun time. But so while I was there, I actually I went with the purpose. I wanted to see what was I had never been. Usually I go out west, but this time I decided to go to New York and just kind of get away. I went on a solo trip actually.
Okay, nice.
And so then I met a few people there. Like I was in a sauna with Epsom salts and stuff. Highly recommend that. It's very good for your health and stuff.
Oh, for your skin? Yeah.
Sure. So it was like Epsom salt walls. But anyway, so they were there, and so. I got to talking to three guys actually. One was a forklift driver from Brooklyn.
Okay.
Nice guy, really nice guy. And then the other two guys were there, and they were investment bankers.
Oh, right on.
And their business model is actually and we got to a point where we called it old school investing with a modern day twist. Because so they both used to be investment bankers with large institutions. Mm-hmm. And they each decided to segue into like a specific niche, right? We talk about niche all the time, and it's like, what's your specialty? And so one of the guys actually does I guess modern day or older, or not older. I shouldn't say older. Like they do traditional investing.
More like a traditional investment.
Yeah.
Okay.
So they do the mutual funds, the stocks, the ETFs, the indices, and all that stuff. And the other one actually is in charge of specializing on this new wave of cryptocurrency, NFTs.
Oh, Bitcoin and stuff like that.
Yeah. So it's kind of cool. And what their whole business ideology is, one of them is gonna take on take the reins with the traditional investing. The other one's gonna take the modern day new investing, and that way they can offer their client base a variety of the two. So you don't really have to go anywhere else. They'll take care of you. So
they'll cater for everybody's comfort level. Say like that old school investor that is not really savvy to the Bitcoin, isn't really savvy to the crypto investments, the betting, or the online trading and stuff like that. They could cater real estate and proven ways of
investments,
earning and investing.
Gold.
All in one organization. That's awesome.
Cool. So it's so funny, and see, that's the way. And I realized that, again, it's just asking questions. I want to know about I've always wanted to damper into that, but I kind of focus on my craft. I focus on what I have to do and my market research and stuff. But it was kind of interesting to hear these guys and what kind of business strategy they're compiling. Yeah. And so yeah, that was a little part of New York that was very interesting. And when they say that city doesn't sleep, it doesn't sleep, man.
Oh no, I bet. I haven't been to New York as a grown up. I went when I was a kid. Apparently, I went to Florida as well. Yeah, I don't remember many of those trips.
So. With those guys, man, just to segue here, like they were asking me some questions about the Canadian real estate market here, right? And they're very well versed. They were very well versed, actually. I was very surprised. Right. Yeah, because a lot of those guys they want to, they want to grow their portfolios as much as they 100%. Can, and why not diversify into a different country if you can, right?
Right.
There's certain implications that kind of restricted them, but they were asking me like, why is it that our mortgages get approved at like a certain interest rate, like the stress test. We always hear stress test.
The stress test.
Right? Stress test. And I don't know if a lot of people really know what a stress test is.
Right. It's true.
And it can get complicated, but it's just a matter of just spelling it out. And long story short, you have a specific interest rate in your mortgage contract. But when we go to qualify you, we qualify you subject to a stress test, which is it can range. It doesn't range. It's either 5.25 or 2 basis points above your actual posted rate.
Your
rate.
Gotcha.
And in actuality, see that there's a reason for that. So we consistently talk about like a housing bubble and a crash, correction, all this stuff, whatever you want to call it.
Yeah.
And we implement rules like stress tests to kind of try to prevent that from happening. So like
kind of like a safeguard sort of thing.
Because you get qualified on such a higher interest rate because should economic policy hold true and there is some form of correction and interest rates do spike up, well then we've approved you subject to that higher interest rate, right?
100%.
But everybody has a view on that because marginal tax brackets are quite substantial here in Canada.
Oh, that's
right.
True.
So we're qualifying you on a higher interest rate subject to your gross income, but what does everybody take home at the end of the day? Net dollars, right? So you got to factor in taxation into everything that you do, whether it's a purchase. And actually I was talking to one of my relatives and he was telling me, it's funny because you don't realize it until you start to control your own taxes and as a corporation, because he's always been incorporated. And he says to me like, I found that I was paying myself as a salary. He owns his own business, and then I came along and asked him, why do you do that? Like, why would you do that when you're subject to marginal tax? When you can pay yourself like a dividend from your corporation, so to speak, less tax. It's different tax law. And so he said to me, he's like, yeah, that was brilliant, but when I was paying a salary, I then had to withhold some money for taxes and stuff. But then on top of that, what he realized is like it's a double-edged sword because your net dollars, you're still paying HST tax, you're still paying 50%.
Exactly.
So it's like tax after tax.
Yeah, exactly.
On already taxed dollars. So then we approve you subject to gross income and stress tests and stuff. So it's just, it's knowing these things. And by no means am I saying it's impossible. What I'm saying is like the way to find out if the affordability is there is by asking.
Right, 100%.
Can I afford this house? And if I can't afford this, what can I afford? And if I can't afford it now, what can I do to afford it later?
Exactly.
Know what I mean? So that I think is just a very, very, very I guess preliminary way to get into to real estate. But honestly, there's more. There's some people ask me throughout my tenure. People have asked me, well, why is it that some people can put 5% down versus 20% down? What is that simple question? What seems so simple to people in my industry may not be so simple to someone that's
the everyday person.
Into the
literally,
market, right?
Literally.
So we shouldn't take what we know for granted. Is what I'm saying.
That's true.
Everybody has a specialty. Everybody has a passion. So ask questions. The more you ask questions, the more you talk to people, the more that you start understanding. And when you understand that, again, no two stories are the same.
Exactly.
You'd be very surprised at how much you can find out just by talking to people.
That's true.
Yeah, no, 100%. 100%.
What do you think about like the first time home buyer thing that the government is trying to implement or that did implement? Like, how does that work exactly?
First time, there's a lot to first time home buyer, right? But for example, like if you're a first time home buyer buying your principal residence, you may not have to put 20% down. You can put anywhere between 5 to 20% down for that reason.
Right.
And I believe that the government actually will match a certain amount of your down payment on a CMHC. We call it CMHC, or an insured high ratio mortgage. Is what the terminology is.
Okay, gotcha.
CMHC is just basically a corporation that insures the government in case you were to default on your property, right? So the government's taken care of.
Yeah, they got their asses covered.
Yeah, for lack of a better word. But in all honesty, man, like these things seem so simple, but they may be complex. I remember my first ever client working with their real estate file. So excited, I'm like, oh, I got this. I'm gonna be the best. I'm gonna kill it,
Yeah.
And then, I saw how many factors I needed to understand to do a simple refinance, and
right.
And then that's when the passion kind of, like, I was always a curious person. I think that the best people are curious people.
Yeah,
some might disagree, but I actually
I agree.
100% I agree.
I do believe that curious people do have the best stories to tell, because you're always asking questions, and
right.
And so yeah, man. So I remember working my first application. It was quite the experience.
No, I bet.
But now, I've seen quite a substantial amount, and that's taught me. And one of my favorite parts of my entire journey was that I was enabled to work in different pockets of the city, not necessarily just downtown core. I've worked in up north, Thornhill. I've worked in North York. I've worked in quite a variety of areas, actually. So it was really nice. My tenure with an institution was really nice. I just, it was my time to kind of branch out and try to grow, because there's always more you can learn, and I wanted to learn in a variety of avenues, basically.
Yeah. Can't ever hurt to expand your repertoire,
Mm-hmm. What was your most craziest client?
No, I can't talk about that, unfortunately, because of confidentiality.
I could tell you, but then I kill you.
I
guess maybe
I could tell you in terms of what I see from a complexity and what a lot of these sophisticated investors are working on. So the whole ideology between of investing is to basically grow your portfolio, regardless of what type of investment instrument you're using, right? So you'll see that some people actually retire off rental income that they're generating, and it's just kind of flowing, right? And somebody property manages for them, so they're just kind of sitting pretty, right? Like the snowbirds going down to Florida for 6 months. I would love to do that.
No, definitely.
You know what I mean? So, but with every investment comes a form of risks, right? So I factor in a lot of risk when I'm working files that are complex. The most complex that I think I've ever seen is just I can't speak too much about it, but it really, it was an influx of properties. The gentleman had quite a substantial amount, and I was like, man, I got to factor this stuff in there, right? Like, he owns this stuff, so you have to factor in your liabilities. One thing that unfortunately isn't taught in schools is, whatever I guess credit product you have will factor into your real estate application.
100%.
So it's very important, and I can't emphasize this enough. It's very important to learn good credit habits,
right,
at a very early age.
Oh, definitely building your credit score.
Yeah. But it's not even so much the score; it's the exposure, right?
Okay,
nowadays, you're looking for properties that if you're looking for a house, let's call it a detached home, you're looking at kind of 7 figures,
Yeah.
So it depends on the area, right? I think some of my realtor friends might get upset there, but
true, that's true.
No, I can find you a better deal. But so you're looking at a pretty hefty average ticket price at least, and so you have to. I don't know. You got to factor in a lot of stuff. You got to factor. Oh, so you have to factor in your any credit facilities that you have. You have to actually take in any car lease, or car loan, student loan, things like that, right?
True,
so the earlier you actually start to ask these questions, the sooner it'll be easier for you to kind of transition into becoming a real estate investor.
Right, 100%.
Yeah.
What are some
good
credit habits that you would tell a young person?
Me
actually.
Just keep it. I can't remember. I've had very good mentors throughout my journey, but honestly, a really good habit is just don't buy it if you can't afford it. And it seems like it's very simplistic, and but it's not,
Yeah, no, for sure.
We need credit as Canadians, because again, we just talked about a variety of factors like marginal tax brackets, HST, GST, all that stuff that we pay taxes on. So how are you, it's kind of, it makes you think that like the larger economic question of how our country's formulated. Is it the right way?
Right,
Why are there some
exactly.
economies that are doing better than us? And is it because we're, this is like really deep thought process, but is it because of the way that things are structured? By no means am I supporting am I putting a political view out there, but like, you know what I mean?
No,
Like, it's just like
100%.
numbers don't lie, right?
Yeah.
These are all
Right.
factual. This is factual evidence. Like, I was also back to your question, like what are some good credit habits? Make your payments on time, obviously that's number one, but like I think it's not even so much about that. I think it's just like the credit exposure piece. Like don't take unnecessary credit if you don't need it. Now with that being with that being said, I think that credit can help you. I think that depending on the way that you utilize your credit, you can, and I said this actually recently to my family members. I said, if your liabilities are generating a form of revenue for you, then it's a good investment.
Right.
But if it's not, well, then it's just it's common sense, right? Like if it's not, then is it a good investment? If your liability is generating a form of revenue for you, then it's a good investment.
100%.
All right. So if again, if I had to answer that, honestly, it's just same thing I've been saying all night. I just ask questions, like just like you did.
100%.
You know what I mean? You got a few answers, and if I didn't answer it, then you ask more questions.
Exactly. Yeah.
Like, literally. Man, I feel like all of this should have been put into like a curriculum. You know what I mean?
Dude, 100%. Yeah.
For kids, like honestly, yeah, they might not pay attention, but like they look back on their exposure, like these terms are gonna seem familiar to them.
Yeah.
You know what I mean? So they won't like approach these topics in their adult life with any question marks.
Yeah.
Like they'll be like, okay, yeah, I heard of this before. Like I'm gonna do my research, and they'll at least know where to get started.
Yeah.
You know what I mean? Right now, like the average person, like they'll have to reach out to somebody like yourself to like get that information. Like to get that concrete understanding.
Yeah, I would hope so. You know what I mean?
Yeah, 100%.
And again, and this is, and I strongly emphasize on this. Like for me, I've regained my passion, let's say, and helping that traditional middle class family to get their first home. I love the idea of that because it's hard enough as it is, and given the last 2 years that we've experienced as people, I think that it's time we go back to some of our traditional core values and like really think about how to set up our families for the future.
Right.
The obligations that we have financially are already so steep, so you might as well become an investor and own something for yourself. That's
100%.
And again, the only way to do it is to actually just jump in there and try it.
Yeah, I heard an interesting thing because I've been doing a lot of research in Bitcoin and stuff there, right? I think the most important part of new investors and just new generations coming up is trying to not only keep up but get ahead of the inflation rate. Right? It's like 2% every year.
Yeah.
And let's say like I have a mutual fund account. I just found out it's about like what is it, like less, like 1.5%. So it's not even like I'm not even breaking even with that mutual funds account, right? So like there has to be investments that go ahead, like obviously higher than that, right?
Yeah, that's the biggest thing.
Yeah, 100%.
And for anyone that may not know what inflation is, actually, it's just very briefly, it's basically the surge and what a price would be from the previous year. So prices are constant. They're going up. And there's a direct correlation actually with prices and interest rates. It's funny. It's they teach that in very preliminary economics. Like they're like you when prices go up, interest rates go down, and when interest rates go up, then prices go down. Some people don't know that, and so it's funny. And when you think about, and now you have to factor in something else that on top of tax, now you're factoring in inflation. See, so because your buddy, you were probably talking to your buddy about investing and stuff, you learned this, and now you're talking to another buddy, and like it's like, oh, now I know that factors into real estate too, because inflation is also affecting real estate prices, right? So, or your grocery bill.
Yeah,
it's all
100%.
And I think that's the thing I want to emphasize on, right, for like our listeners and stuff, is that like there is a direct relation right now to finding investments that get ahead of that inflation rate.
Oh yeah, exactly.
Right, because a lot of us think, like I say a lot of us because I was like this until about like a couple of weeks ago, that I just saw like my money was good where it was, you know, and to think that like, wow, I was super wrong, and just by asking one question or just by having one dream, which was like, you know what, let me do something with my money, let me try to see if I can do a down payment for a condo or whatever.
Yeah,
And then
100%.
just that one question, that one meeting, opened up other things, right? Like searching for other investments, whatever, having you on, and like that's what you said. That one question always opens up to more.
You can say,
definitely.
It's just conversation, you know,
right? And starting that conversation. That's the hardest thing. Just talk to somebody. You know what I mean? Like talk to somebody. Somebody might know a buddy. You know, like somebody might have a friend.
Yeah,
you know? And that's all it is. Just start that conversation about like wanting to take care of your money. Look at yourself like financially in the future and like plan it out.
Nobody can do it alone.
Yeah, exactly.
I'm a strong believer in you're as strong as your network, you know.
Legit.
And it's not
that's a good point.
And a lot of people say it's not what you know, it's who you know, but the reality is it's who you know, but in what sector, you know, like how can I leverage my network to, you know, further expand my knowledge and stuff, you know. There's people there are people that are in the pharmaceutical business and stuff that are like obsessed with this COVID stuff, you know. There's people that are there's people that are in investing and stuff. Like I have a lot of like wealth planner friends that, you know, all they talk about is stocks and stuff, and they talk about like, you know, what's the next big thing is going to be.
Yeah, true.
Right, and then I factor in my knowledge, and then all of a sudden it's just like a whole circle. And again, so back to that New York story, there was a forklift driver there from Brooklyn, nice guy, and he's making a decent salary. And I asked him, and same question. So it's funny because it's not only in Canada, it's in the U.S., it's in Mexico, it's in South America, Europe, Asia, everywhere. You want to own something, right? And it's funny because the way I see it, you know, the way I've seen it is that there is already a commodity that's being bartered that's universal, I think.
Right.
You know, and I think that one of the biggest things that I learned in economics is that like your currency exchange arbitrage it's like different currencies at different values. You can generate a form of like growth, but you know, real estate is a universal thing. You take currency and then you buy a property, right? And then it works with the same fundamentals. So it just makes me think about how much more can we do if we were a little bit more intertwined. So that's what my objective is. I'm trying to learn how to kind of factor all these things into play, and you know, and not only help my clients, but you know, it's kind of nice to be in a business where the ever scale of it, I can't foresee it. Actually, like a correction might adjust prices, but it's not going to terminate the market. You know what I mean? So how do we factor in for those costs? How do we factor in for those mistakes? Well, asking questions, I guess, you know,
literally.
Yeah.
Starting that conversation.
What do you think how, I don't know how it works exactly, but like the market price, it's rising. Like, is there a cap? What happens after that? How long? Like, what do you know?
So recently, actually, I just I posted a story on my Instagram for OFSI, and they're the ones that determine whether that stress test I was talking about earlier today. They're the ones that control what that interest rate is. Should it go up? Should it go down? And remember what I said. So there's an actual correlation to prices. So if interest rates start going up, obviously affordability goes down because your loan is more expensive.
Yeah,
that's the most simple way I can say that. So your interest rate's higher for the same amount of price, like who can afford it? In terms of the housing market and the prices and stuff, listen, no one can really, you can speculate, but you can't time the market. You can't predict the market. If you could do that, honestly, like, and you might,
it's all calculated.
You might be like Elon at that point.
Yeah, exactly.
Maybe that's what he does, but
it's like part cyborg, this guy.
But
part cyborg.
So I know he already has a chip in his brain. He just hasn't told us yet.
Yeah, he's been testing it.
Does he really look you in the eye? I don't know. It's like this block in there. It's like a screen.
Literally.
You know. But in terms of prices and stuff, I'm sure that there's always going to be some form of influx. There's always going to be some form of correction. You know, it's like the stock market. It's like Bitcoin. It's like whatever you believe in. It's always going to go up and down. That's the reality.
Yeah. And like to finish off, like I know you mentioned something about like a fundraiser.
Oh yeah.
So tell us a little about that.
Some obviously. Fortunate. I had a little bit of a run-in with cancer in the year of 2020, right? And so I'm very passionate about it. Unfortunately, it's actually it runs in my family. So my father's been affected, my grandfather's been affected, but we're all okay. We're all doing well. We got treated and stuff. So we've actually taken it upon ourselves to host a fundraiser in June. Still in preliminary stages, but I think we're gonna get to the point where everything's gonna be booked and stuff in the next few weeks. And yeah, so it's gonna be for mental health awareness for cancer survivors.
Oh wow!
Yeah, because it's you know awesome, what the good fight is the good fight, and I honestly am so proud of anybody that fights this disease. Because when I was going through it, like I would, it was COVID, right? So it was lockdown. So like the hospital was like under lockdown, but I still needed to get treated for it. So I'd walk in and it was just cancer patients.
Oh man,
there's no like empathy. There's empathy for each other, right? But no like family love.
Yeah, exactly. I think that's huge. It's kind of cold.
It must have hit a lot harder.
You know what? It gave me perspective. Because it made me think about the illness in itself versus the illness in me, and it's really funny how my mind worked during that period, because I was I was more empathetic to the situation for the people that were around me, because I knew I was affecting them.
Yeah,
and me myself, I was like, I knew I could put up the good fight, so to speak. So, it gave me perspective on the illness, and I think that the fight itself is it could be substantial, but the aftermath. The build back, like the coming back to to normalcy, like to feeling like I'm good,
again.
So
that confidence in yourself again.
And I'm glad to say I'm in a good place, man. So
good to hear.
I'm very passionate about this. So I'll invite you guys, and then we can.
100%.
It'll be fun too. I'm hoping to book something by the lake, so like we can do like an outdoor banquet, so to speak.
That's awesome, man.
Right by on the water there.
yeah.
Give us updates. We'll put like the information.
Okay, cool.
Yeah, we'll drop the info in the description.
Grass, bro, man. Like I admire you a lot. Thank you for coming on and sharing, dude. Like I hope it's not the last time.
No. We gotta, we gotta do this more often.
We'll do a follow for sure. I'm sure we're gonna have questions in the audience. Like, can this guy like explain? I want to get into this sort of investing or that. Yeah.
By all means, tag my Instagram, man. I'm open to just 100%. Even if it's just like a quick question of like, I already have a broker or something, and like I just need a second opinion or like, what are your thoughts around this? Like, now by no means like do I want to step on anyone's toes or anything like that, but so like general questions or whatever the case may be, right? So just shoot me a message, tag me, and then I'll be more than happy to help anybody that approaches me, really.
Okay, awesome. Thank you, Brian. Thanks for coming on.
Yeah, thank you, dude.
Yeah, thanks for having me, man. Like I really love what you guys are doing.
I learned a shit ton.
I'm gonna shout it out. I'm gonna post it and
please.
Stuff.
Thank you, dude.
Thank you. Audience for you guys. All right, cool.
Thank you.
Appreciate it, and for that, man, thank you for joining us. Don't forget that
on episode 25.
Episode 25.
Damn,
can I get a home? Yeah.
Guys,
it's gonna let me do it by myself.
This guy's
no. All right, but don't forget to like, share, subscribe, smash that like button,
hit that notification bell, guys. Drop that subscription, man. All right, really helps us out.
Thank you, guys. Catch you guys on the next one. Out of Chaos.
Yeah.